What's the best way to start investing if you're a complete beginner and you've only got £100? This is one of the most common questions I get in my investing community on school, and today I'm going to answer it. So using all of my 24 years of real investing experience, I'm going to give you 5 examples of what would happen if you invested £100 into completely different assets: stocks, REITs, crypto, gold and index funds, just to give you an idea of what to invest into. But before I give you the 5 options, I'm going to tell you a personal story of why investing into assets is so important. Over the last 20 odd years, I've met hundreds of people full of regrets. Contractors in the late 50s or early 60s who earned a fortune working overseas. Now, I remember working in Oman back in 2020. A colleague, 60 years old, told me that he could have easily saved £1,000 per month between 40 and 60, but never did. If he'd have invested that £1,000 every month in the SP 500, averaging 10% annually, which is in line with historical averages, he would have had over 750,000 today. That's financial freedom for most people. The earlier you invest, the better, so you can retire early and live life on your own terms. Option 1, individual stocks. The first investment is individual stocks. Buying a stock means you actually own a piece of a company, like Apple, Samsung or Tesla. Sounds exciting, yes, but here's the thing. Picking stocks isn't just throwing data at a board, as I found back in 2010 and 2011, when I lost our life savings gambling in the stock market. Gambling because I had no financial education and I had no clue what I was doing. You need to research things like financial statements, leadership teams, brand strength and long-term potential. Otherwise, you're probably going to lose some or all of your money. On the plus side, stocks can give you 2 income streams: growth when the share price goes up, and dividends, which is a little bonus payment some companies hand out just for owning their stock. And if you use the right accounts, like a stocks and shares ISA in the UK or a Roth IRA in the US, your profits are shielded from taxes. That's huge, but the risk, high, very high. As I've already mentioned, if you got into Nvidia a few years ago, you'll be sitting on a fortune in 2025, depending on how much you put in. The problem is picking the right one. Yes, you can hit gold or you can get burned. And the truth is, most beginners get burned. Let's say you invested in a Tesla 12 months ago, you would have got 59.3% returns. So with £100, you'll be sat on £159. Now, before we crack on, I just want to tell you this. I'm obsessed with helping people to retire early because over the last 20 odd years, I've seen too many people with too many regrets, mainly financial. So hit the subscribe button so we can build wealth together and so I can help more investors, especially beginners, with my experience. Option 2, REITs. Next investment for you to consider: REITs, real estate investment trusts. Think of a REIT like this. Instead of needing hundreds of thousands of dollars or pounds to buy a property, you and thousands of other investors pool money together. The REIT buys offices, hotels, apartments, shopping malls, and you get a cut of the rental income. The learning curve here is moderate. You don't need to deal with mortgages or tenants, but you do need to understand what kind of properties the REIT actually owns. Here's the best part. By law, REITs have to pay out at least 90% of their profit as dividends. That means they're brilliant for passive income. If you invested £100 into a REIT 12 months ago, you would now have about £105 based on average returns of 4 to 5% here in the UK. It's not big growth, but it's steady income. And unlike buying a single rental property, you don't need to deal with tenants calling you at 2 a.m. about a broken boiler. Option 3, cryptocurrency. Third and probably the most controversial, crypto. Now, crypto is like digital money that isn't controlled by banks or governments. Bitcoin, Ethereum, and thousands of other cryptos run on blockchain technology. On one hand, Bitcoin has been the best performing asset of the last decade. On the other hand, crypto is very volatile. It can rise 1,000% one year and crash 90% the next. For beginners, the learning curve is huge. You'll need to understand wallets, exchanges, and basic tokenomics. And while there are ways to earn passive income through staking or yield farming, they come with serious risks. Tax efficiency, honestly, it's rubbish. Almost everything you do with crypto is a taxable event in most countries. Risk level through the roof, but the results, well, £100 in Bitcoin 12 months ago would have turned into £193. That's a 93% return. Really, really good. And if you want to know how you could potentially retire with Bitcoin in just 10 years, see below for a recent video. But don't get carried away. For every Bitcoin, there are hundreds of dead coins that went to zero. Crypto is high risk, high reward, not for the faint-hearted. It's not easy. And as always, nothing in this video should be taken as financial advice, and the full disclaimer can be found below in the description. Option number 4, gold. Fourth is gold, the oldest wealth protection in history. Gold doesn't generate income, no dividends, no staking rewards, but it does one thing very well. It protects your wealth when things get a little bit shaky. You can buy physical gold coins and bars, or you can just invest in a gold ETF online. Tax efficiency can actually be pretty good. For example, in the UK, certain gold coins like Britannia's are exempt from capital gains tax. Risk level is medium. Gold won't usually make you rich, but it will keep you safe during inflation or economic downtime. £100 invested 12 months ago would have turned into £140, a 40% return. Not as high as Bitcoin, but still really good returns. Gold is about security and is a hedge against inflation. Option 5, index funds. Finally, my favourite way to invest. Index funds. Instead of betting on one company, an index fund lets you own a tiny piece of hundreds or even thousands of companies at once, like Apple, Microsoft, Amazon, and much more. You do the initial work at the start, and then it's set and forget. And if you want to learn how to invest in index funds step by step, I'll leave the link for my most recent playlist below in the description. How to retire early. After putting the work in at the start, you just pick a fund like the SP 500 and you're done. No need to study financial statements all night. Passive income is moderate since many companies inside the fund pay dividends. Tax efficiency, really good, especially if you use ISAs or Roth IRAs over in the US. Risk is lower than individual stocks because you're spreading your bets across the market. If you invested £100 12 months ago into the SP 500, you would now have 117 based on the 17% returns. Again, not as high as Bitcoin, but loads more stable. And historically, index funds have delivered about 10% per year over decades. That's how you build serious long-term wealth. Summary. So, what's the best way to invest £100 as a beginner? Stocks can make you rich if you pick the next Nvidia, or potentially wipe you out like what happened to me in 2011. REITs are steady income generators. Crypto is high risk, high reward, and it isn't for everyone, but is potentially life-changing. Gold is a safe haven and is your hedge against inflation. And index funds, well, they might seem boring, but I like boring, and they work. If I was going to give my younger self a bit of advice, I would say start with index funds. Add a bit of gold for safety, maybe dip your toes into REITs, and only invest in stocks or crypto once you're ready for the roller coaster. Or as Jason Greystone says, earn your right to risk. The key is not the amount, it's starting early. Even £100 today, thanks to compounding, can turn into thousands over time. But how do you build serious wealth? Well, if you see below, you'll find a recent video where I talk about how the game changes after you make your first £100,000.